Here are the major housing and real estate stories shaping BC this week. This is BC Homes and Real Estate This Week for Monday, November 24th, 2025. Let's begin. The BC Financial Services Authority has suspended the brokerage licenses of Jovi Realty Inc. and Lighthouse Realty Limited, effectively prohibiting both firms from providing real estate services. According to the regulator's notice, the suspensions follow November 6 orders that froze both brokerages' trust accounts as part of an ongoing investigation into alleged trust account mismanagement and deficiencies in required oversight. BCFSA states that both brokerages are no longer authorized to trade in real estate. The managing brokers of each firm are now operating under restricted license conditions. Consumers who have deposited funds with either brokerage may be eligible for compensation through the province's Special Compensation Fund, and tenants whose rents were paid into the affected trust accounts are protected under the Residential Tenancy Act and are instructed to continue paying rent unless formally advised otherwise. BCFSA says that the suspensions will remain in place while the investigation continues. No further enforcement outcomes have yet been announced. Across BC, the rental market is undergoing its most significant shift in more than a decade, and the numbers show it clearly. According to the latest rentals.ca and Urban Nation National Rent Report, average asking rents in BC are now 5.8% lower than this time last year, and nearly 10% lower than 2 years ago. Analysts note this marks the largest annual decline recorded in the province since the early 2010s. In Vancouver, the trend is even more pronounced. The city has now reached a 43-month low in median asking rents, with declines of roughly 11% over 3 years, and an unprecedented 23 consecutive months of year-over-year decreases. Surrey is showing a similar pattern. One-bedroom asking rents are down approximately 12% year-over-year, and property managers report incentives including free rent periods and reduced deposits at levels not seen since the early stages of the pandemic. At the same time, new data from the CMHC shows a structural shift in how housing is being built across Canada. A report summarized this week by The Hub shows that housing starts intended for homeowners are on pace to hit their lowest level in 30 years, with just over 41,000 homeowner-focused starts recorded from January through October. By contrast, purpose-built rental construction is hitting record highs, with nearly 88,000 rental starts in the same period, projected to more than 105,000 rental units for the year of 2025, more than double the level of homes being built for sale. Housing economist Mike Moffat told The Hub that purpose-built rentals have become more viable than high-rise condos, noting that rising construction costs, tighter financing conditions, and land use constraints have made forest sale development more difficult. He also highlighted that sale prices in many markets are no longer sufficient to justify new condo projects, contributing what he called an evaporation of sales-driven construction. This push toward rental supply aligns with what analysts have been observing in BC. Thousands of new purpose-built rental units, many funded or financed through CMHC programs dating back to 2020 and 2021, are now completing and entering the market. Metro Vancouver alone is expected to see over 10,000 units complete across 2024 and 25. With more supply available and demand growth cooling due to slowing population inflows and changing renter behavior, rent pressures are easing for the first time in years. But industry sources caution that if rents continue to fall, the financial case for the next wave of rental construction could weaken. Developers often rely on projected rent growth to secure financing and justify new builds. If rents remain flat or declining, projects planned for 2026 and 27 may be delayed, paused, or redesigned. While rents across BC are easing for the first time in years, attention is now shifting to the supply side, and this week brought 3 connected developments shaping how new housing may come online in the years ahead. First, the province released its new Build Faster toolkit, a package of standardized forms, digital checklists, and recommended policy practices designed to shorten rezoning and permitting timelines across municipalities. The Ministry of Housing says the toolkit responds to local governments asking for clear processes, and a spokesperson described it this week as centralizing what works. The timing was deliberate. The province inked the toolkit directly to softening rents, noting that continued downward pressure depends on more supply reaching the market, not just approvals, but completions. Planners and analysts pointed out 3 constraints that could determine whether the toolkit delivers results. First is staffing capacity, particularly in planning and engineering. Second is technology gaps, especially in cities still using paper workflows. Third, political will, which remains uneven across the province. Even a 10 to 15% improvement in approval timelines could translate into thousands more homes arriving sooner, but only if cities adopt the tools and only if builders proceed. And that brings us to the second development. At the regional level, Metro Vancouver Housing advanced a long-term strategy shifting its non-market system away from crisis response construction and towards stability. The report outlines priorities such as expanding supply, modernizing aging buildings, increasing unit diversity, and improving tenant outcomes. One Metro official described the shift as moving from emergency build mode into a sustainable long-view housing system. This matters because Metro Vancouver is one of the region's largest non-market landlords. When its planning model changes, it affects capital funding, site selection, and the timing of publicly backed housing. And the third story completes the picture. The City of Vancouver released its Housing Target Progress Report showing 4,845 net new homes delivered between October 2024 and September 2025, roughly 17% higher than the prior year and nearly 90% of the city's annual target. A development economist noted that for the first time in years, completions are beginning to align with approvals, a sign of momentum. But the report also stresses that approvals today do not become homes for 2, 3, or even 4 years, which leads to the key reality tying all three stories together. Governments do not build housing. Developers, nonprofits, and financial markets do. Streamlined approvals help, regional strategy helps, targets help, but construction only moves forward when interest rates, project costs, absorption expectations, and return forecasts allow it. So while policy tools are evolving and while the pipeline appears to be flowing more consistently, the next phase depends on partnership between government setting the rules and the builders delivering the homes. That coordination will determine whether easing rents translate into long-term affordability or simply a temporary pause before the next supply crunch. In Vancouver's Chinatown, the long-running 105 Kiefer Street proposal reached what the city described as its final hurdle after the Development Permit Board unanimously approved revised design changes on November 17th. The project, led by Beedie, first received approval in principle in June 2023 on the condition that it return with design modifications. Before that, the application faced years of legal and political resistance, including a 2017 council rejection and a 2022 ruling from the BC Supreme Court ordering the city to reconsider the application. Community groups and heritage advocates have raised concerns around gentrification, cultural fit, and displacement. But city planners noted that the revised plans meet the required amendments and achieve what they called thoughtful design improvements. This approval doesn't end the debate, but it does move the project toward construction after nearly a decade of delay. South of the Fraser, the outcome was very different. At its November 17th meeting, Surrey City Council voted not to support a proposed non-market and supportive housing development at 152nd Street and 19th Avenue, a project that included 202 affordable rental units, 40 supportive housing studios, and 20 complex care units. This proposal faced large-scale neighborhood opposition, including a petition reportedly representing more than 8,000 residents and businesses. The coalition cited concerns over proximity to schools and community facilities, the level of care involved, and the absence of traditional public hearing, which was waived under provincial legislation. Mayor Brenda Locke said the people that require supportive housing and complex care are some of the most vulnerable residents in the province. Simply placing 40 supportive units and 20 complex care units in this residential area without genuine engagement with the people who live there is not responsible planning. Staff had recommended approval, and the province had indicated support, but council instead directed staff to work with BC Housing on possible amendments, leaving the project in limbo. In Surrey's Clayton neighborhood, the Surrey-Langley SkyTrain extension hit a very visible milestone this month at Fraser Highway and 184th Street. Construction crews are now assembling the elevated guideway for the future Hillcrest 184th Street station. And if you've driven that stretch lately, you'll see just how close the new tracks run to the existing townhomes at Mackenzie Estates. While some users on social media have been showing some pretty alarming photos, more honest angles show that while the line does run pretty close, it's not quite as extreme. According to the province, the Surrey-Langley SkyTrain extension is slated to open in 2029, with major guideway work continuing through 2026 and station construction and systems installation into 2027 and 28. So while the visual impact is now being impossible to miss, the full arrival of the rapid transit in this corridor is still years away, and the land use planning around it has only just begun. The City of Surrey has taken another formal step toward enabling more small-scale multi-unit housing with new bylaw amendments intending to streamline approvals. Under the province's small-scale multi-unit housing legislation, which came into effect earlier this year, Surrey now allows 3 to 4 units on most residential lots and up to 6 units on lots located near frequent transit corridors. The city has identified more than 13,000 qualifying parcels under this transit proximity criteria. At its November 2025 meeting, Surrey Council advanced amendments to the Development Permit Procedures and Delegation Bylaw and the Development Application Fees Bylaw that remove the separate development permit requirements for many Houseplex applications. The intention is to reduce the processing steps, shorten application timelines, and allow eligible projects to move directly into building permit review. The city has also reduced the application fee for Houseplex submissions to $389, a material decrease from traditional rezoning costs. A change Surrey says will lower barriers for smaller scale infill development. This shift matters because Surrey is one of the fastest growing cities in Canada, and ground-oriented housing has become increasingly scarce across the region. The new framework creates the possibility for additional family-sized units without relying on high-rise towers or large master plan developments. However, a key structural reality remains. Governments can streamline approvals, but developers determine whether projects are financially viable. In the current market, with softening resale activity, moderating rents, and higher borrowing costs, many builders across Metro Vancouver have indicated that small-scale multi-unit forms are not yet economically feasible on most lots. That means policy alignment alone will not guarantee new supply. New mortgage data and economic indicators are painting a more complicated picture for homeowners, especially here in BC, where borrowing costs, renewal timelines, and market stress are converging. According to the latest release from the Canada Mortgage and Housing Corporation, the national mortgage delinquency rate fell to 0.22% in the second quarter of 2025, the first decline in 3 years. But in BC, CMHC reports that the rate inched upward, rising from 0.16% to 0.19% over the same period. That increase is still low by historic standards, but in the most expensive housing market in the country, even a small rise signals thinner financial margins for households carrying large mortgages and high cost bases. CMHC also highlighted a looming pressure point. More than 750,000 mortgages are set to renew in the second half of 2025, followed by another 1.15 million in 2026. Many originally signed at significantly lower interest rates. Against that backdrop, attention now turns to the Bank of Canada, which is preparing for its next policy announcement. Economists note that the last week's retail sales figures showing national sales up 0.7% in September and core sales rising 0.3% suggest consumer spending remains resilient. Several bank analysts have said publicly that stronger than expected retail activity makes it less likely that the Bank of Canada will accelerate rate cuts and could even delay easing if inflationary signals re-emerge. For mortgage holders facing renewal, that means borrowing costs may remain elevated longer than many had hoped. The shift is already visible in borrower behavior. CMHC data shows a continued move away from variable rate mortgages toward fixed term as homeowners look for predictability. Meanwhile, lenders and developers are watching the rise in BC's delinquency rate closely. Even a modest uptick can lead to tighter underwriting and more conservative financing, which slows construction, sales activity, and investment planning. For landlords and investors, softer rent growth, particularly in Metro Vancouver, adds another layer of pressure, reducing offsetting income at the same time mortgage costs rise. A major theme in BC housing over the past week hasn't been prices, permits, or construction, it's uncertainty. And that uncertainty is coming from a renewed public attention on Aboriginal title following the Cowichan tribe's decision in Richmond. There were no new court rulings this week and there were no new land claims filed. But the Cowichan decision, which recognized Aboriginal title to roughly 750 to 800 acres in Richmond, including parts of Garden City lands, has led to a surge in public questions, media coverage, and misinformation about land certainty across the province. Here are the verified facts as they stand today. The Cowichan title decision remains under negotiation between Cowichan, the province, and the federal government. The Coquitlam First Nation has reaffirmed its 2016 title land over publicly owned lands in Coquitlam and Port Coquitlam. It is not new, but it is receiving a renewed attention because of the Cowichan ruling. Municipal councils in Richmond and Port Coquitlam have publicly requested clearer provincial communication tools for residents who are unsure what title claims do and do not mean. And this resurgence in attention isn't limited to BC. Across Canada, land-based claims and settlements have resurfaced in the national conversation. Land claims in Nanaimo, Ontario, and Quebec have all resurfaced. Again, none of these are new filings, but what's new is the public focus. What's driving concern right now isn't the legal process, it's the interpretation of it. The courts have confirmed for decades that Aboriginal title exists and must be respected, but the courts have not said that private homes are being seized. They've not said that BC's land title system is collapsing or that reconciliation requires instability. That narrative is coming from social media, speculation, and fear, not from the decisions themselves. A recently released British Columbia Real Estate Association discussion paper takes a cautious and factual tone. It does not predict outcomes, does not stir controversy, and does not offer legal interpretation. Instead, it calls for clear public communication led by the government, coordinated frameworks involving First Nations, planning certainty for municipalities and builders, and a reminder that BC's land title system remains one of the most secure in the entire world. And for those of us in the real estate sector, one message is especially important. We are not lawyers. We cannot interpret Aboriginal title, and we must not tell clients what will happen to their land. If someone asks, the correct answer is, that's a legal question, you need to speak with a lawyer. Former MLA Adam Olsen wrote in the Tyee that Aboriginal title should not be seen as a zero-sum equation, where recognition for First Nations automatically means uncertainty for everyone else. He argues that clarity, negotiation, and acknowledgement can actually produce more durable long-term certainty for all parties. And that notion aligns with what Indigenous governments, homeowners, lenders, and builders all say they want: fairness, clarity, stable frameworks, predictable processes. The coming years will involve negotiation, policy work, communication, and education. These matters have been ongoing for centuries. Our responsibility is to stay informed, stay within our scope of expertise, and stay grounded in the facts, not fear. For our last story, the Fraser Valley Real Estate Board's 31st annual Realtors Care Blanket Drive is now in its final stretch, ending today, November 24th. Across the Fraser Valley and throughout the Lower Mainland, brokerages have been gathering new and gently used coats, blankets, sleeping bags, sweaters, hats, scarves, gloves, and brand new socks and underwear. These donations go directly to local charities supporting neighbors who are facing the cold winter months with very few resources. As one of the volunteers for this drive myself, I've already seen how so many have stepped up in a big way. The coldest nights of the year are coming. A coat, a blanket, a pair of gloves, each one is a direct act of care that someone in our community will feel immediately. If you have something to give, take a moment today to see if there's anything you can drop off at one of our locations. You can find full details and drop-off points at blanketdrive.ca. And that's our look at BC homes and real estate this week. If you found this information useful, feel free to subscribe and turn on those notifications. Additionally, if you have any related stories that you think I should cover, drop a message in the comment section and I'll take a look into it. Thanks for watching. I'm Brad Rickert with Real Broker. Take care of yourselves and each other. Mohawk Council of Ganawaki, Semiahmoo, Stop scratching.